All right.
Let's talk about Bismark, the Managing Director and Chief Financial Officer of Financial Derivatives. 2 days ago, he was quoted in this day newspaper regarding his comments on the 1 year of Lamido's bull run in the Nigeria's financial sector and the economy. This was what the newspaper quoted Bismark as saying that the banking industry was overbloated and indulged in overtrading, underscoring the need to right-size. The question people should ask about the reforms is whether the Nigerian banking industry was well positioned before the CBN's intervention or not. End of quote. Bismark this day of the 1st of June, 2010. Welcome to the program. Bismark the CEO at Financial Derivatives. Good morning. Thank you very much for
Good morning,
comments. I'm sure. Were you surprised at what your comments as the newspaper just put it out there?
No,
you weren't.
No.
So let's try to put some of those words, expressions you use into context. Let's start from this when you said that the banking industry was overbloated. Definitely not in terms of the number of banks that we have on Broad Street, that is from 120, 89, eventually to 25. What's your idea of an overbloated banking industry before Lamido stepped in a year ago?
First of all, let me correct the word. There's not like overbloated. Bloated means exaggerated, so you can't be over-exaggerated. Secondly, yes, in terms of its capitalization, the move to 25 billion and then to almost ₦1 trillion in asset size that growth was rather rapid, and so I would say that the rate of growth and the expansion of the banking system was a bit too rapid for the time frame in which it was expected to actually develop.
What were your thoughts when this process was being put together and implemented by the immediate past central bank chief, Chukwuma Soludo?
I think, obviously, it was unorthodox in terms of the requirements. Banks were required to have 2 billion naira in capital, and they were asked to increase their capital by 12 times in a matter of 2 years. I thought that was a bit draconian. But in any case, it has happened, and they had to comply. And it led to the shakeout and consolidation. The question is, the banks that survived, were they the best of them all in terms of its capacity, in terms of its management, in terms of its market position? But that's all history. What we are trying to talk about today is what is the position of the banking industry today relative to what it was a year ago? What is the monetary policy stance of the Central Bank of Nigeria in terms of inflation, money supply, interest rates, exchange rate, compared to what it was a year ago? Are we nearer our broad objectives, economic objectives today, compared to what it was a year ago? Then in that context, we can evaluate the performance of the current central bank governor.
But still trying to drive this vehicle using the rear view mirror, as it were,
yes.
So to speak. Was it just the banking industry that was bloated, or the entire financial system, or that the banking industry blew the financial system into kind of a proportion that both the operators and the regulators, the supervisors, found it very difficult, therefore, to cope with?
No, I think what happened was simply there was a regulator-induced capitalization requirement, which meant that you had to go from 2 billion to 25 billion. That was the objective. 2, the strategy to implement this meant that people had to go to the capital markets. Before then, only about 5 or 6 banks were quoted. Now, almost every bank got quoted because the only source of capital of that nature was in a public space. To do that, you needed the brokers and the broker-dealers, and you needed the capital market, the pension funds and all of that to participate. In doing that, in trying to achieve this objective in a matter of 2 years, both the good, the bad, and the ugly all participated. So what happened was that the ugly and the bad dominated the good. And so what you had paper capital, you had bubble capital, and then they not only did it once, they went the second time and the third time, and the rest of it is history. At the end of the day, 75% of the stock market capitalization was of the banking industry. How much of that was real capital? How much of that was bubble capital? And when they raised the capital, what were they going to do with it? They started looking for assets. So they took they took disproportionate risks and assumed risks that they couldn't manage. The rest is all known. We know what happened after that.
You talk about indulgence.
Well, let me put it this way. We have got to that point, and now it's the corrective measures that are taking place. There's sanitization and there's regulation. So in this discussion, we are going to look at the sanitization process. We're also going to look at the regulation process. Sanitization is how you clean up the place. Regulation is how you actually govern.
We've always done sanitation, as it were.
Yes.
In the banking industry. It's not the first time, not the second, not the third. In fact, the 1980s and the 90s were those years when the NDIC, the Deposit Insurance Corporation, was busy almost on a daily basis. I tried to find one distress resolution or another. At a point in time, some independent sources said about almost 1 out of every 2 banks in Nigeria were distressed. 24, 25 banks were taken down in a single day many years ago. So we've always done this kind of sanitation, but does it seem that we've always had our fingers on governance, regulatory leadership right at every point in time? It looks like we're very good at trying to come in, sweep the whole place, as it were, but without putting measures in place to actually be sure that, use the Nigerian parlance, maintenance culture.
No, but the truth is that it's an indication of a breakdown in the regulation one, the supervision and the monitoring that leads to the crisis which you now have to sanitize. What has happened is that you come to sanitize because there's a breakdown, right? And so what are you trying to do now? You're trying to ensure that the regulatory framework is strengthened and that the supervisory process itself is more efficient so that the early warning signals and it's maintained all along, and then you end up with less of a crisis outcome. But it's not just, it's interesting that you talk about it in the context of the entire financial services industry. What is happening today in the capital markets, and where a situation where the Security and Exchange Commission is trying to name and shame broker-dealers who are insolvent, who have been involved in malpractice, and is receiving pushback even from parts of the administration who should actually be encouraging this kind of sanitization. You find that it's a reform measure that is going to take place, and some people within various segments of government are fighting against reform. So the reform process is revolutionary. So you will have reform in one direction, and you will have those who are trying to push back against reform because they know the outcome is going to be unpleasant to vested interests. Okay.
This cleansing by Lamido 364 days ago, tomorrow will be 365, it's been very brutal, as it were. Lamido made a kind of assertion to that when he came to the stock exchange on the 16th of September last year, where he says that there are going to be painful consequences for some of those actions that he had taken, that he would take moving forward.